for Peaks Wealth Management, here to present our recommendation for Petsmart stock. My name is Amber McMahon, and I'm here with Jake Biak, Yang Yang Fun, Justin Rivera, and Dylan Taylor. Our recommendation is a hold. While we believe Petsmart has a significant portion of market share and a great competitive position, we feel it is currently fairly valued. The current stock price is $38, and our target price range is between $38 and $42. Petsmart is the largest pet specialty retailer in North America. They're known to have a strong balance sheet, and sales growth numbers are between 2 and 3% for new stores and 2 and 4% for comparable stores. Petsmart was founded in 1986. They are based in Phoenix, Arizona. They operate 1,160 stores, offer over 10,000 products, and services they provide in store are grooming, training, boarding, and veterinary services. Petsmart is in the consumer discretionary sector. Key factors driving Petsmart's sales are consumer spending, pet ownership, and humanization of pets. And average annual growth for the industry is in excess of 6.5%, which has increased steadily since 1994. Issues Petsmart should be concerned with is increased competition with discount stores and grocery stores expanding their assortment of pet products, e-commerce with more customers shopping online, and of course recessionary conditions. Consumer risks are changes in consumer preferences, also with the few locations that they are selecting for new stores. Competitors with increased assortment of pet products and also the prices they're able to sell them for. And with the business, product recalls, and logistics with vendor relationships. And two market indicators Petsmart looks at are home ownership and the unemployment rate. And when unemployment is high and pet ownership is low, pet spending tends to be lower than in other years. Petsmart has 14% market share. A way to keep their market share is through their exclusive product lines. Martha Stewart's creating a line of pet toys for Petsmart, and GNC is creating a line of natural pet supplements. And the competitors are big box retailers, with Walmart having 25%, grocery stores, and other pet specialties such as Petco. Petsmart has the competitive advantage by offering a broad assortment of pet products. Customers are able to bring their pet into the store with them. Employees are knowledgeable about the products they sell. But while discount stores and grocery stores offer a trip consolidation of everything in one trip, Petsmart has everything pet specialty related in one trip. A customer can drop their dog off at the grooming station and pick up the pet food and treats all in one place. Petsmart divides their customer base into 3 different categories: Mart customers, Smart customers, and Smart with Heart customers. 50% of Petsmart customers fall into the Smart category, meaning they shop around 4 times annually and spend around $136. But 50% of total sales fall into the Smart with Heart category, and this is only from 10% of their customer base. And what Petsmart plans to do is move their Smart customers into the Smart with Heart category by offering and promoting their services to increase customer retention, cross-selling products, and promoting their more premium pet food brands. And now Yang will talk about service revenue.
Thank you, Amber. As Amber just said, Petsmart in the future, Petsmart is going to focus on improving their service qualities, and that would be the main driver of the revenue. As you can see in this chart, by 2009, service revenue represent roughly about 11% of the total revenue, and coming from training, pet hotel, and grooming. Based on all the information we have in the future, we analysis and forecast the service sales by using a mathematical operation research optimization. As you can see, all the blue bar here is our forecast service revenue, and by 2014, the service sales will count nearly 16% of the total revenue. Now, in 2009, $3.4 billion is generated by grooming and boarding services in pet industry, and Petsmart holding 15% of the total market share, but there is still another 85% out there waiting for Petsmart to conquer. And now let's going to take a look at the net sales for the revenue breakdown. And the merchandise here, which is the orange part you can see, is represent 88% of the total revenue, and over half of the merchandise sales is generated by the pet food, treats, and feeder, which is the green part. And for the net sales, we use past 10 years data, net sales data, and a nonlinear model. We found the net sales growth rate for the past 10 years is 10.67%. year over year. And this high growth rate is mainly due to a large amount new store openings every year. And in our forecasting, the net sales growth is roughly about 7%. The reason for this is because Petsmart is slowing their high-paced business empire expansion and going to focus on improving their service qualities. And for the market share, as you can see in the chart, in 2009, Petsmart itself holding 14% of the total market share, and only 10% is coming from other pet specialty retailers. And for the stocks, Petsmart is in NASDAQ. As you can see in the chart for the past 1 year, Petsmart outperformed the NASDAQ, and adjusted beta is about 0.87, and which indicates the Petsmart is less volatile than the market. And now Jason's going to talk about the valuation and the financial analysis.
Thank you, Yang. When we take a closer look at the company's cash flows, we can see that there was a steady revenue stream over the last 5 years, and in 2009 they reached $5.6 million in sales, up from $5.3 million in 2008. Our projected sales are expected to increase between 7 and 8% annually going forward. This is mainly due to their expanding products and services, new and exclusive contracts with Banfield, as well as their partnership with Banfield Pet Hospitals. As Yang mentioned before, between 2005 and 2008, Petsmart has had a massive store expansion where they were opening roughly 100 new stores per year. Going forward, from 2009 on, we're looking at keeping that number right around 40 per year. Historically, capital expenditures were roughly 6.5% of net sales, which amounted to $300 million, and going forward, due to their slowed store expansion, that's roughly 2.1% of net sales, which lies right within management expectations of $120 to $130 million per year. This is mainly because they're focused on remodeling and expanding their current stores. Their cash flows are expected to increase to $500 million by 2014, and this is due to their decreased capital expenditures, increased store efficiencies, as well as expanding sales growth. As Amber mentioned before, we currently have a hold recommendation on Petsmart stock. Their current price is $38, which falls right within our expectations of $38 to $42 per share. When calculating our target price, we use 3 different valuation models: free cash flow to the firm, 3-stage dividend discount model, as well as an enterprise value multiple. If we take a closer look at the company's initial dividends, they first started paying them in 2005, and that quickly, at 3 cents per share, and that quickly rose to 33 cents in 2009. We don't expect that high growth rate to continue, but we do forecast it to increase at 22% for the next 5 years, 16% until 2019, and 5.5% for the long run, giving us a target stock price of $36.34. Looking at the free cash flow model, we established investors' required return to be 9.175% based on a T-bond rate of 3.5 and a market risk premium of 6.5%. We established a discounted weighted average cost of capital of 8.75 after taking into consideration Petsmart's $11 million in capital leases. And based on these figures, we reached a target price of $40.34. Another very important multiple that we were looking at when valuing the company was their enterprise value multiple. Now, because Petsmart is the only pet stock in the specialty retail sector, we did a correlation of stock prices within that sector over the last 5 years, and we found that the closest correlated companies were Dick's Sporting Goods and Home Depot. Both of these companies we feel are recessionary proof and very similar to Petsmart's operations, boasting multiples of 9, 10, and 11. Currently, Petsmart has a EV multiple of 9, and we forecast that to increase to 10 over the next coming years, and that gives us a target stock price of $38 to $40 per share. Once again, we do have a hold rating on Petsmart stock. We have a target price of $38 to $42 per share, and currently they're valued at $38, which is fairly reflected in the market. We do feel that Petsmart is a great company with strong management, very strong prospects for the future. They have a great market share. But we do feel that that is currently reflected in their target stock price. Once again, Petsmart is the pet services leader, and because of their low capital expenditures, that's going to put more money back into the investors' pockets. And we'd like to open up the floor for any questions.